This is Rick Rule for Rule Investment Media, sponsors and producers of the Natural Resources Investment Symposium in Boca Raton, July 23rd through July 27th. I'm delighted today in the pre-conference CEO interviews to welcome Duncan Craib, a man I've known for some time and a man who will come across in today's interviews as very knowledgeable in the uranium space. Duncan, thank you for agreeing to the interview. Thank you, too, for your sponsorship and support of the Natural Resources Investment Symposium.
Thank you very much, Rick. It's a real pleasure to be here, and I appreciate the opportunity.
Duncan, we've asked our attendees and the students of Rule Investment Media generally to understand something about the background of the people and the companies involved. We believe that prior success is an indication, not the only indication, but an indication of future success. Tell us something about the origins of both of Boss Energy and also your own prior activities that would lend some credibility to the answers that you're going to give us later in the interview.
Thank you. In 2006, I joined the industry. I joined as the CFO and company secretary of a company called Kalahari Minerals, which was listed on the London Stock Exchange. It held a 43% holding in Extract Resources that went on to become one of the big success stories of the last uranium cycle. So shortly after joining, they discovered the Husab deposit in Namibia. And then it was really growing that deposit into becoming one of the largest now uranium mines in the world. In April 2012, we sold the group to China General Nuclear, which at that stage was China's biggest investment into Africa. I was then asked by the chairman of CGN to be the finance director of the Husab mine. So I relocated to Namibia with my wife and young children and really spent the next 4 years building that mine. It was a $2.8 billion build. And we commissioned it in October 2016. So it was around that time that I was approached to whether I would take the opportunity of heading up Boss Energy, because here was a mine, a proven mine that previously produced and exported uranium around the world. All I needed to do was get involved, try and increase the production throughput and lower the operating costs. And really, the last 7 years has been focused on just achieving that goal.
So let's talk about what you've achieved. Give us an overview of Boss and tell us the investment considerations that you think are positive and why our attendees should familiarize themselves with this opportunity.
When I look around the world and we look at projects and really the decision point for joining Boss Energy, I think you need to look at certain key factors. Of course, the resource is important, but then look at the quality of the project. What jurisdiction is it located in? Is it in a friendly jurisdiction that really promotes the permitting side? Do you have access to human capital, the actual people who can operate uranium mines? And what type of sort of cost structure can it operate in? So they're the fundamentals that I looked at. Boss Energy ticks all those boxes. It's in the friendly state, the premier state of Australia being South Australia. It's previously exported. It holds a £3.3 million per annum export permit, which is federal government endorsed. And by that, all the other permits are in good order. So we're 100% permitted. And right now, we have got the full steam ahead to get into production in the fourth quarter of this year. So being a restart project, we want to be there ahead of the curve and take advantage of the near upswing that we foresee happening in the market.
Tell us something about tonnage and scale. Is this a mine that people should care about?
Oh, absolutely. I mean, tonnage and scale, we start with our first year of ramping up, 880,000 pounds. The second year, 1.25 million pounds, up to a nameplate of 2.45 million pounds. We've got the ability to increase that production profile, but for now, we're sticking to half of our resource, our JORC resource. We're yet to incorporate the other half of the JORC resource, and we've done this in a strategic manner. We've done it because the mining license is fully permitted, ready to go with half the resource. We just need to work on the other components. So, yeah, it's a tremendously exciting period for us.
So, Duncan, I find with you, similar to most of the successful entrepreneurs that exhibit with us, that you've worked 7 years to be an overnight success. You've worked in the darkness in uranium for 7 years while the price was low. And now that the price has returned to some form of normalcy, you're ready to go ahead. Tell us, though, in a forward-looking basis, what will happen over the next 12 to 18 months that will cause the market to know more about the deposit, to have a higher degree of confidence, and hopefully, of course, to make the share price go up. Or, in the words of that great American investment philosopher, Janet Jackson, what have you done for us lately?
Thank you. I mean, if I just take a step back, in March 2021, we purchased 1.25 million pounds of uranium on the market at a price of 30.15 US per pound. We could see the price beginning to rise. We were front running the Sprott Commodity Trust, in effect. It's the same principle as what we're doing now. We're about to go into production. Why? Because we know that there's a supply deficit. Recently, I mean, we're getting inbound interest, particularly from European, North American utilities. They're self-sanctioning themselves away from sort of more the Russian historic supply, looking for new Western production. There's a time lag. With uranium, it's really the price signals are there to bring on new production, but that incentive price of the spot price isn't yet high enough to bring on new development. So that's where restart projects such as Honeymoon come into their own, and that's why we're going now. We're gradually ramping up to take advantage of that upswing in the market, and we're going to leverage in or sort of layer in market-related contracts to get there. We've deliberately equity raised to get to this point. There's no debt in the company, 200 million currently in liquid assets on the balance sheet. We've held off contracting because we're waiting for these price signals to occur, and they're coming. We've got inbound interest from utilities, and it really is shaping up to be a wonderful place for a restart mine to get into production. Looking forward over the next 12 months, we've got drill rigs in July going into our satellite domains to start proving up those resources such that they can be in a more defined category to extend the life of mine production throughput. But really what you're going to see now is a mine coming into production, ramping up its profile and able to lock in prices, having that first mover advantage of working with strategic utilities, those that are well financed and ready to move forward. So we're beating the herd. We want to be there before new development comes into play.
I think that market arbitrage is something that I'd like our attendees to focus on. The idea that, as an example, the International Energy Agency says the incentive price is for a restart is $60 a pound, and that the incentive price for greenfields is $75 to $80 a pound. You might comment, too, on the fact that an increasing amount of transaction in the uranium business is taking place in the contract market, which is opaque, rather than the spot market. People are relying for their pricing signals on the spot market, but more transactions are taking place in the term market, which is characteristically higher priced. Could you talk to that and to your own marketing strategy?
Sure. So the term market is really what we focus on as a producer. Last year, I think nearly 170 million pounds were contracted through the term market. Already at the end of May, 100 million pounds has been contracted. So the term market's typically what a producer will focus on. And we do that because that gives you a strong counterparty with long 10 years of contract, call it 5 years, 7 years, 10 years, and it gives a stability in price. So what we've seen is a fundamental shift, though, in the pricing of the term contracts. So they've moved away from fixed price contracts to more term-related contracts. And that means that, market-related contracts, that means that there's a floor price and a ceiling. Recently, Cameco said that what they're seeing in the market are floors at around 45 to 50 US per pound, ceilings closing in on 80 US per pound. That allows the price or the company to move within that price boundary. I would say we're seeing exactly the same. And for currently, while we're talking, in the last week, spot prices moved 2.5 or 2.25 US per pound. We think it could happen within a few weeks that we're back up to 60 US per pound. So term market-related contracts allows you to move with the market. Our strategy is to layer into that rising market. It's really difficult to cherry pick the top of a market, but by layering in, you're able to take advantage and keep growing with the market. That's what we want to do. When the price overshoots, which I think inevitably it will, that's when we'll probably look to go more sort of fixed back to fixed-based contracts, and lock in for 7-10 year type plus to enjoy the upside for years to come.
Duncan, at Rule Investment Media, we've asked our students to develop personal relationships inside companies, people who can develop, in effect, a curated view of the company. Where might our students contact the company, and who specifically, which living, breathing human being, can our students and attendees develop relationships with to better understand BOSS?
I'd be most happy to respond to any queries that come in. So if your attendees would like to correspond with me, they're most welcome to. My email address is my first name, Duncan, Duncan, @bossenergy.com.
Ladies and gentlemen, you'll remember from the Rule classroom that the best answer to the question about a company contact is always the CEO. If the CEO is too busy to talk to you, that's a different way of saying that you aren't important as a partner to him and he doesn't care about his cost of capital. Duncan answered that question exactly correctly. Duncan, thank you for your service to uranium investors. Thank you for agreeing to this interview, and thank you in particular for your ongoing support and sponsorship of the Natural Resources Investment Symposium series.
Thank you very much, Rick. And again, thanks very much for the opportunity. I really sincerely appreciate it. Thank you.